Hi, everyone, and welcome to this 35th weekly market analysis. Here is Francois Ablé. Hope that you're doing very well. As usual, traditionally, Monday, we, getting each other on and we study on the financial markets with the weekly market analysis for Global Street Trader Academy. So my name is Francois Ablé. If you're the first time to discover me, I'm the main trainer and founder of Global Street Trader Academy, which is online Canadian academy for you can learn for trading and also others market research and know how the financial market works. So if you're still interested, feel free to ask any type of question. We are open to that, and also make you framed and getting stronger to take a position on financial markets. So here's a seventh quarter, Monday, 26th November. We just going to start really quick for the disclaimer. I won't try to not spend time a lot on the financial on the chart, because this week will be a very busy week with a central banker speaking as like Mario Draghi. We have also a publishing on the GDP macroeconomic data on Europe and also United States. So it's very a busy week, right? So here the disclaimer, by heart the disclaimer, don't afford the money that you can to lose. This is a program that is not like solicitation for incentive, near or offer for financial product that will be covered in this video. So yeah, I'm going very quickly. I just stay in the time like 20 to 25 minutes. That's all. And here is your weekly market analysis number 35th chapters, right? Okay, so let's go in quickly to the chart, like the US dollar index. Last night was when I was preparing the chart. Of course, we don't have this starting quotation here. We were just close below this line, which is 997 points, right? So that's why it gives me like the fact to think about the this chart is again still bearish for me, because we just we break this this level previously, right? And then the second we start, we getting into low, and then we just close above this line here, this white line 97, and then we close below that. We got the Thanksgiving day, so the market, US market, was closed, and also we got like a semi day because on Black Friday, right? So the market was staying stuck around here. So this morning we just seen that we starting for coin below this 97. 97 is like very crucial level. It's level which is drive the US dollar index since 30 years, 32 years past ago. It's very a crucial level, as you see here, right? And we clearly seen the bearish trend of the US dollar index. This chart is only weekly proposal, so that's why my bias on US dollar index didn't change, right? Because also we know that based on the progression of the oil, right, we clearly see that the oil is a kind of preparing the a global economic slowdown, right? So that's why the Fed as like reviewing his like anticipation of the GDP and also the inflation, right? So based on that, we probably seen that the dollar will probably going a bit lower, because technically, if we close below this line here, which is 97, which is crucial level, we do have kind of contraction based on the ascending and very narrow channel here. We're probably going back a bit, just a retreat. might be around here, around like the 95 or 90, probably 96. But we probably get into onto the back, get out in the back, because we evolve on the very narrow ascending channel again, and we close below this crucial level. We didn't going over there, right? So that's why all my strategy for this week will be on the rebounds on the index and gold and other stuff. We'll see probably after the end of this program, but I'm not still I didn't still I didn't change my mind about the dollar index. I'm still bearish on that, right? And the oil, because the oil drive the market, and oil is inverted correlated with dollar, right? And most of big producer, including like Iran, the Canada, and also United States, and also Saudi Arabia, like most, like they doing the best effort, right, to pushing the oil at the $50 level, which is like uh, the world threshold. There anybody be like getting into profit, even if you're going below the $50 level. It's only for the Gulf countries could still make money on the oil, but on the like the North American producer, as like Canadian and United States, if we stay on like on this $50, it would be great for the economy. But if you're going lower, right, it won't be like it would be difficult for them to make money with the company of like mineral and others, company relative to these sectors. So that's why they probably get in agreement for make sure that the oil will stay above $50. So that being said, if they're doing that, we're probably seeing a dollar will correct a bit, because the market's starting to anticipating expect like take this expecting taking action. And then we will see technically that the markets, the dollar starting doing like in an ascending narrow channel. So we know that most of statistically we're getting until the back, and we're probably going until this level here, right, at the 90 95.50 around. So yeah, so based on that, I expecting for I'm expecting for like a retreat for the dollar this week. Even we have also like a massive central bankers talking with on Europe, especially for ECB with Mario Draghi, Constancio, and Benoit Correa. We have also a publishing for inflation data on the Canadian dollar, and we have also a publishing for the third quarter of this year, which is like 2018, for the figures for the GDP, right? And we expecting for a bit, the figure will be probably a bit lower that we expecting, right? Because the Fed expecting with a figures like close to the 4.21 or 4.2 or 4.1% of the progression for the GDP, but we probably going until 3.5 or 3.6, right? So that being said, that's the growth didn't going with the inflation as expecting by the Fed, then they can adjust the monetary policy, right? So that's why probably the dollar starting anticipating that with this quick retreat. We can before to going into other charts, we can just see a projection for the US dollar index if we get out to the to this narrow ascending channel, just to see where we can probably going. So as you see, we can going probably here around there. like at the 95 or 90, 94.50, right? So this is just a slightly correction. Then it could make bounce the index and also the gold. Okay, so let's go now to the USD CAD. So based on that, as I said, we do have probably an arrangement between most of producer of oil, which is they would like to do a regulation on oil for the big producer. So make sure that the oil stay above the $50, which is the world threshold. And it's just arranging the crude oil, like the Canadian dollar, right? And also North American like WTI, right? The Western Texas oil. So based on that, we'll be probably around on this ascending channel. If the Canadian dollar like get strengthened, it probably break this yellow ascending channel here, and we clearly see that this is the weekly support, right? So at this level, the market's starting to get some like a bearish bias based on the retreats of the dollar and also the strengthen for the Canadian dollar. Canadian dollar now is just stable, but with the data of inflation and also the data based on the OPEC uh, OPEC regulation due to oversupply, we can have the Canadian dollar like get strengthened, and we be put some like a pressure on USD CAD. So breaking this, like stay below this level, is a bearish bias for me, right? And this the line start is the pink line here, which is $32.66. So if we break here, of course, we can go in and accelerate it to the $33. But as long as we stay below that and also be above on the monthly close, we just can doing back and forth here as a like a ranging. But my strategy is just to short each time that we going here and we just failing. I'm just shorting the market. So one $32.66 would be my starting my line start for take a short position if we test it or fail right here. But on the low here, I'm starting for accumulating because we still above on the monthly close. So as long as we stay here, it will be, as I said, back and forth. So we can do scalping, a strategy around there, like between $1.31 72, sorry. So $31.72 between that and $32.66 would be a scalping strategy. But if we break it and we're going below this monthly close, we definitely going into the back and reintegrated the monthly range, right? So USD CAD is still bearish for me for this week, right? Starting this trading day session, right? So if we go quickly to the Dow Jones. So Dow Jones, I do a couple of research again for this week, and I saw like many traders expecting some of dead cat bounce, right? You know that the dead cat bounce, it's like when the market rebounds preceding for a solid or massive, short or collapse movement, right? So this is the kind of dead bouncing that trader expecting. I'm just staying around, like I'll be like very cautious for that because we are we are on the monthly close area, right? So of course the market could still bouncing, and if you look at closely these two candles here. These two candles here is a kind of a spinning candle, which is appear like after the gap, and it's just like expecting that the market trying to pushing higher, but the sellers, the pressure of seller are too much, too heavy, right? So that's why traders call about like dead potentially deadly dead cat bounce. And I agree with that, but we have also very careful, because if we can also breaking this green area here, doing some like a test and rebounding, so it can kind of like a bearish trap, right? So if we stay in this level here, I'm not getting like short the market. I will probably starting to buy the market until the recovering for the this gap here. We probably feel it, right? Because if you see the previous movement at this level here, so here we have like a bottom, we do acceleration. Here also we have also the bottom and we have an acceleration. So we probably get some like another's this kind of movement. Or if you're going also lower in the previous previous date, we have also here kind of an acceleration at the same level, like around here. So that's why I said base, if the dollar starting show kind of strengthen, we probably going into accelerate, and it could be some like a weekly demand for accumulating movement for to going to test like previous level here, right? So that's why I'm this week I'm probably bullish on the Dow Jones. So let's now go into the gold. And gold also, it's right, it's um is doing like some of stabilization and reach, and is doing like nothing, which just is just stay around and play around this zone here. But based on the event positive event coming, as like the meeting between China, like the the President Donald Trump, and also Xi Jinping on the China, we could have kind of appeasement bit around the G20 meeting at Buenos Aires. So this is like a positive echo. It could put some like it could pushing the gold higher. And also at this level here, which is of course weekly supply, but if the dollars going to the going down, based also on the reallocating for the portfolio and flow for the investor, we could have like an acceleration for the gold. So this week I can stay neutral, or are also looking for a low to buy gold to test like a previous level, where probably we have 1245 or 1240, right? So let's finish now with like the bond. Bond as being crazy, like a previous day, it was like very accelerating movement. This gap here, we didn't like filling yet, so we just stay below crucial level, which is 160. If we also be around here on the monthly close, and in intraday, I recommend you to stay neutral. But if we do in acceleration to break this weekly supply, we can going to test like the previous level, then filling this gap, right? So that's why I said, you will see at the end of the presentation, I said if we stay below, this is my strategy actually. If I'm staying like, if the market stay below under 60 or under 60 60.50, I will be trying to be neutral or bearish. I want to see the market going over under 61 to comfort me for the like buy positioning, because I know that the fundamental are more good. It's good for the Eurobond, because Draghi said that he want to continue for like the stimulus for ECB, right? So it's putting like uh, bullish uh, bias on the Eurobond. And then after that, we have also the massive, a plan for the Europe to save a couple of banks as like German banks or Italian banks, based on their budget, which not like same budget at the Europe. So they want to, if they want to stay to Europe, they have to pay the interest of the debt when they have on the like calibrating for the European debt economic zone area, right? So that's why I'm definitely bullish on the euro bond, but I want that also be confirmed if we break this previous level here, which is the week supply, as 161, and then pushing higher to the cover this previous gap. So if we stay here around here, I recommend it to stay neutral. And if we reintegrated this previous level as like below 160, then we can short the market, right? Okay, so this is the recap. So that's what I said for the USD CAD this week. The bias of the expansionist government policy and also the Fed funds decrease in probability due to oil collapse is a bearish bias on the USD. And also for in terms of the Canadian government, we have a negotiation on the new trade, which is including Asian country and Pacific Economic Zone 2. I talked a lot for the previous weeks ago, and also the oil regulation by OPEC countries putting a bullish bias on Canadian dollar. So all of that is getting from a bearish momentum on USD CAD, and for Dow Jones, due to the like neutral monetary policy or bearish monetary policy, is going to the bullish bias on the index, right? And the flow in investor also for reallocating for investment and portfolio due to low price on stock and index in general can off like a bullish bias. So you put like kind of weekends of dollar, so the index could take an advantage for that. And gold also, it's if central banks increase the gold net reserve, and we could have also a possible retreat of the dollar. It could be some like kind of return money on market investment instruments. So it's a bullish momentum on gold for upcoming too. And for finish, we have a euro bond based on the fact that Draghi said, and others also official ECB said, that they need stimulus to overcome the European area slowdown, and also the fact that the Italian government can afford to pay the interest of the debt calibrating to the budget for European zone. It's kind of a bullish momentum on Eurobond as we saw. That's why I said it's tricky now for trade Eurobond, because we are around this level, around the under 60 and 65. It's tricky for trading Eurobond. Just winning that we break the this level, like below 160 and 50. If we fell below that, just sell the markets. That's why I will do, right? And on Eurobond too, we can also stay neutral between 160 90 or 160 50. So between this level, I will stay neutral. And if we're pushing higher over like 161, then I will starting to buy the Eurobond. And this is all my strategy for this week that I would like to show you. You can also take a look on and see if it works with yours and compares to that. But this is mine personally that I will do this week on USD CAD, and also Dow Jones and others asset that we saw through this program. So thank you so much for watching this video. It was a pleasure to present to this program. If you like it, please leave a comment. That will be very appreciated. And don't forget to subscribe to this YouTube channel, and also take a look on Facebook page. I will see you around for the next week. Thank you so much, and have a great day.